What is the best way to manage your crypto tax? I'm Mike Loder. Crypto Corner starts right now. Hello everyone and welcome back to Crypto Corner, presented by the team at BTC Markets, where each episode we go about detailing those ever-changing crypto market trends. I'm going to hand it over to Carolyn Bowler, CEO of BTC Markets, for more on this interesting topic.
Thanks so much for joining us today as we're talking about crypto taxation. Joining me is Maryna Kovalenko, who is the CEO at Syla, a tax solution here in Australia. Maryna, thank you so much for joining us.
Thank you, Caroline. I'm really glad to join you.
Can you talk us a bit through around the origins of Syla and the solution that it brings into the Australian market?
Sure. My own journey in crypto tax started back in 2016 when I first purchased assets in crypto, which were my alternative assets at that time in my investment portfolio. I remember I was working for a large accounting firm as a senior international tax consultant. And it didn't take long. We started getting more and more inquiries from people that are investing in crypto. And since that time, I started to specialize in that area of tax. We researched about every tool that was available at that time on the market, trying to find something that can help our team to consider and in more practical way to assist clients in crypto tax. However, with a handful of crypto-specific tools at that time, they were mostly built for the US market. You have to keep in mind that the tax law in each country is very different. And for that reason, it was really struggling. It was a struggle for us to really make it work for Australian market. And tax in Australia can get really high, up to 47% for individuals. And for that reason, it's not only about sorting crypto tax, it's also optimizing the net results, making sure that you are not overpaying tax and paying just around the right amount that is legally available to you. From that, we decided that there was enough interest for us to launch a crypto tax software that would be specifically for Australian market. And that's how Syla started. We were lucky enough to receive support and funding from the Australian government. And from that, we've been helping Australians to invest, to optimize on crypto tax outcomes.
That's fantastic. Can you talk us through, I mean, certainly for myself, as somebody who is paying tax and working in the crypto industry, I'm baffled by the space personally. And there's this concept of lowest tax first out. Can you explain a little bit about that and how that kind of relates to crypto taxation in particular?
You may be surprised, but according to the Australian tax law, you actually have flexibility in choice. In most cases, there is an opportunity to have a choice as to how it gets taxed in particular situations. We call it tax elections. Why does it matter? Well, whenever you have a choice, there is an opportunity to calculate the tax outcomes for each choice, and we call it tax optimization. So you can select the one that actually ends in a better tax outcome for you. For an Australian tax investor in crypto, there is a very important choice that you can make. It is parcel selection method. I'll give you a simple example. For example, you have 100 Australian dollars and you would like to invest into one Bitcoin. So let's say you did that, and later you found out that Bitcoin went up to 150,000 and you decided to buy one more. So now you have one Bitcoin at 100,000 and another Bitcoin at 150,000. And later the market went up to 200,000. So now which one did you sell? And this is where the parcel selection method comes across, because if you apply FIFO, which is a classic, well-known method in the tax industry, first in, first out, so that means you will select just the first parcel. And it may result in a very different tax outcome for taxpayers. There could be LIFO, which is last in, first out, or HIFO, highest cost base, first out, but they are not resulting in the best tax outcome. At Syla, we developed that we call LTFO, which is lowest tax first out method, which gives you an opportunity to go through all your purchases of the asset and see which particular purchase will result in a lower tax outcome. Just by designing the software to suit the Australian tax legislation, we were able to help our customers to lower the tax outcomes.
That's terrific. It certainly seems like it's a really practical tool for an Australian crypto tax investor in particular, obviously. Can you tell me, are there any other kind of specific features that are for the Australian market in particular?
The most important part of Syla is the tax module. The module was developed and designed that all logic and calculations are suitable for Australian market. So what that means is that in Australia, we actually have different types of assessable income. Perhaps you've heard one of them is the capital gains. However, there could be all other ones like ordinary income from staking or airdrops. And in Syla, we also support active traders and any businesses with crypto. So there could be sales of trading stock. We have the feature that is specific for Australian market where you can evaluate your trading stock on 30 June at cost or market value and select the lowest in between by each asset of cryptocurrency. That helps traders to optimize their results. There could be also foreign currency gains. So if you were buying with USD or Euro, this is when it's very important to calculate the foreign currency gains outcomes. It's even support non-assessable income, which is quite rare these days, but if you've been gambling on one of the online casino, it's available in Syla to also process that. The tax module in Syla also calculate each tax outcome for all of those types of assessable income for Australian tax legislation, and it's the best fit for that. There are also a lot of attention to detail, features that are specific to your entity. If you are an individual or trust, you may get like CGT discount, which would be 50% on your long-term gains that you hold assets for longer than 12 months. However, if your entity is a self-managed super fund, then it is 1/3 in Syla because we have special account type for SMSFs. If you are a company, it should be 0. And it's good to know that everything of that is supported in Syla because it's specific for Australian market.
And just with that, I suppose one of the next questions has to be around the tax reporting. Again, not something I'm particularly familiar with. Are there particular nuances to the Australian market when it comes to reporting? And if so, kind of how do you manage those different nuances?
At a higher level, it is a straightforward process. So you import all your transactions into Syla, you review them, and then you just download your report. But let's get step by step. So initially, when you create an account in Syla, you would download only all your transactions. At the BTC markets, you would go into the area of API keys, and you can create read-only keys and import that information into Syla. Syla will sync all your transactions, all your deposits, withdrawals, trades, and any other airdrops and other type of transactions. However, if you're not comfortable with the API keys, you can also easily and smoothly import CSV file. In BTC markets, it's quite easy to just grab your transaction file, which is just one file with all your transaction history, and Syla will process that for you. If there are transactions that are not classified, for example, withdrawals, if you have withdrawals in Syla and it's unknown where they went, they will be labeled as Syla suggestion. So that means you should be going into those and reviewing them and perhaps classifying them into more appropriate class. For example, if it was a withdrawal to your friend as a gift, you would change that to gift sent, and Syla will apply the right tax implications for you. If you happen to not classify that and leave it as a withdrawal, Syla will take a safe assumption by making that as a taxable event for a taxpayer. In your portfolio if your portfolio is more complex, we do recommend you can invite your accountant. So it's a very smooth process to invite your tax advisor to help you to reconcile your portfolio. They will be able to review the balances per each platform or wallet. If you have external wallets, you can also import your transactions through XPub or like public address, and all of that will be imported in Syla. Once you are happy with all transactions, you can review them and press on download your report, which you can use to prepare your own tax return or provide to your tax agent.
So it sounds like it's a pretty comprehensive end-to-end state of reporting and kind of calculations using the Syla platform. So I suppose that leads on to then what's next for Syla? What kind of future developments do you have in mind?
We've been putting a large focus on addressing private wealth in Syla. So for the investors with a larger portfolio, and perhaps if you have complex structures such as self-managed super funds, companies, trusts, Syla can have those specific accounts for you. We've just launched an account management feature that helps all taxpayers to manage easily the entire portfolio of private wealth. So you can easily switch between your SMSF, your individual portfolio, your company, or your trust. You can invite others to collaborate like together with you. It could be your tax advisor or your spouse, or perhaps like any team member from your business.
Terrific. Thank you so much, Maryna. That's been wonderful. Thank you so much for joining us today. We've just run out of time, I'm afraid, but thank you again to Maryna, who's the CEO at Syla, and also to our audience today. I hope you've learned something from this. Thank you so much. Bye-bye now.
You're watching Ticker. We'll have more in just a few minutes.